Okay, good morning, everyone, and welcome to the 72nd edition of the Coffee Microcaps Morning Meeting. My name is Mark Tobin. I'm the founder of Coffee Microcaps for anybody who is joining us for the first time. And I know we have some of our regular attendees joining us again this morning, so welcome back to those people. I've got a couple of quick intro slides, and then we're going to get straight into it with our company for this morning. First of all, I'd like to give a mention to DMX Asset Management, our sponsor for all the virtual events here at Coffee Microcaps. If you're looking for a small cap or a microcap fund manager, please do check out the PDS and Financial Services Guide on their website, or indeed contact Stephen or Michael. Quick compliance and disclaimer slide. For anybody who is joining us for the first time this morning, the companies we generally have on here are capped under 300 million, are in revenue and approaching cash flow break even, or indeed are already profitable. We tend not to have companies from the resources or biotech sectors, so what I like to call industrial microcaps, which can encompass microcap financial services, consumer goods companies, software companies, basically anything that's not kind of biotech or resources. Structure this morning's webinar, it's going to be 30 minutes, which we're going to break down into a 20-minute presentation, followed by 10 minutes of Q&A. If you do have any questions, please type them in the Q&A box rather than the chat function. Just makes it easier for me to moderate the questions to our presenter. And please note the webinar is being recorded and will be posted on the Coffee Microcaps YouTube channel tomorrow morning. If you want to follow us, Coffee Microcaps, you can get us on Twitter, YouTube, LinkedIn, and I also write a monthly free newsletter, which you can get on the Substack platform. Just search for Coffee Microcaps and it'll come up. I'm delighted to be welcoming back a company that's presented before, Selfwealth, but this time we've got the new CEO, Cath Whitaker, who is going to be presenting the Selfwealth story to us this morning. And with that, Cath, I'm going to stop sharing my screen and hand over to you.
Can you see my slide now?
We can, Cath, if you just want to collapse down the thumbnails, if you can, like you did the last time, just so we get it a little bit bigger and a bit centered. Okay, perfect.
Very good. Okay, thank you so much for that. Thank you for bearing with me on that little glitch. Yes, thanks again for having Selfwealth on Microcaps. Very important for us to communicate where we are in Selfwealth's journey and all the exciting updates that we have, and most importantly, what our strategy is going forward. Of course, we have our own disclaimer slide. Okay, so who is Selfwealth? You know, we're at a very pivotal moment from a company perspective. You know, we see ourselves having migrated across from being just a cheap ASX equities platform to one that is absolutely leading and innovating in the retail wealth management space. We are already established as the leading challenger to the big bank. We enjoy a number 4 position, that is after 3 of the big 4 banks. So we have already taken the 4th place from one of the big 4 in terms of retail equities trading. We are absolutely on track to be the first to offer crypto and shares on the one platform. And so whilst others have had to do all sorts of things, to do mergers, etc., or acquisitions with crypto platforms, we will be the very first platform to give retail investors the capability to invest in international equities, ASX equities, and crypto, but we're doing it in a very Selfwealth way, which I'll go into detail a little bit later on. We have already established ourselves as an award-winning platform. You can see the multitude of awards that we've already attained. In the last 6 months alone, we were recognised as being in the top 10 for the Fast 100 companies, number 4 in Australia for the internationally acclaimed FT awards in terms of growth, and you can see their consistency in achieving, you know, Finder awards and money management awards. We're very focused as well on diversifying our revenue. Profitability is at the heart of Selfwealth. You know, Selfwealth, for those who don't know, you know, we have been in existence already for 10 years. In financial year 21, we were cash flow positive. In this most recent financial year, which of course is concluding today, we have instead focused on a growth agenda. But the reason behind that is to make sure that we're building out diversified revenue streams, focusing on cost, so that we can indeed at some point go back to profitability. So I've talked a lot about the last year. In just 1 year ago, we did commence our 18-month transformation that did require a capital raise, and we have been thoughtfully and responsibly investing those monies into a growth program. And we've made terrific progress, as you can see from the list of achievements that we have already implemented. For those who don't know me, I come from a background of establishing either new business units, new product lines, and it's all about bringing the right people together at the right time to make sure that we can develop a truly innovative and leading edge experience. So we're well on our way from transitioning from that cheap ASX trading platform to wealth creation. And you're going to hear me talk about wealth creation a number of times. We see this enormous opportunity in the share of intergenerational wealth transfer. We see a real need in the market as financial advisors move away from the industry to providing a credible, trusted platform where everyday Australians, mums and dads, and sophisticated investors and small financial advisors want a platform that they can go to that's simple, that's easy to use, that have a variety of asset classes and information that is available to them. In the last year alone, you know, we have implemented ESG thematics. We were the very first broker to provide free of charge ESG data points so that ESG related investors can make appropriate decisions. We've introduced our minor account functionality, access to Hong Kong equities markets. Our launch on crypto is imminent. We've invested heavily into providing, you know, thought leadership, content, and perspectives. We've absolutely facilitated instant deposits as well onto the platform, which was very warmly received. And we've also really focused on that user experience. Simplicity is key to us. And there'll be more improvements being made in that space. Something else that we did that we thought was very important was we updated our brand. And this was important to us for a number of reasons, is we very much want to provide the human element to investing, to wealth management and creation. And we're very conscious that it needs to be focused on a variety of people. You know, we have a very diversified user base on our platform that we're very proud of. And we've done a lot of work understanding and listening to our clients in terms of, you know, what they need, what they want, and how we can present a very different view to other brands or experiences that are out there, which is very focused on a small subset of people in our community. So we do have a variety of brand beliefs, and you know, one of our absolute key mantras at Selfwealth is that we are here for decades, not days. And as we expand into our wealth management platform, you're going to see that come through in more and more trusted content. So a little bit about our numbers. It is important to show our credibility that we have achieved you know, 10 years of experience, and to be one of the very few fintechs in Australia last year that was cash flow positive is in itself an achievement. We have grown at a steady rate. We still see some very encouraging signs in terms of growth. And of course, it's June 30, so I can't give too much away in terms of what our 4C results are. But, you know, I wanted to share with you how we've built out the growth to date. Australian share trading, we launched that in 2017, the very first on the market to offer flat fee brokerage. Introduced US share trading at the end of December 2020. We were absolutely, from a timing perspective, right time, right place. As you know, the retail stocks and the meme stocks certainly took off in early 21. We introduced Hong Kong share trading at the end of last year. We did that to really, again, listening to our client base. You know, they wanted to invest abroad. They wanted to also invest in technology stocks. And so, you know, from that, we took the plunge, and we, again, were the very first retail platform in Australia to offer the Hong Kong market. We have, of course, crypto launching very, very soon. Subscription revenue as well. For us, it's more about the subscription benefits, making sure, again, that we've got the engagement in place and we're bringing the right tools to our clients. And, you know, we have, of course, our growing cash balances, which indicates a capacity for investment. Okay, so I think another unfair advantage that Selfwealth has over competitors is data and analytics. It is at the core of what we do. For over 5 years now, we have been carefully collecting and curating some of the trading data that we have on the platform, some of the sentiment analysis. And we do so, again, being very prudent around our marketing spend. It's very easy to get swept away with what we believe is the wrong thought process of, you know, every single marketing dollar counts. We're very thoughtful in terms of our marketing spend. We want to make sure that that marketing spend is carefully directed to clients that we are looking to attract. We do have over $8 billion worth of assets already on the platform, a very significant size, which allows us to have the breadth of data and views available out there. We also have invested very heavily in our content and education piece. In one of our most recent YouTube sessions, we had over 5,000 viewers on it. We do get regular webcasts and YouTube channel views that have thousands of people. And look, we pride ourselves on not being paid for any content that appears on the platform. So we're truly establishing ourselves as an independent thought leader and content provider. Looking at, you know, beyond where we are today. So you've heard me talk about that we're moving away from, you know, being another cheap ASX equities player to being a true wealth management platform for retail investors. And we believe that we've got the right credibility to do that. We believe that we've got the right infrastructure and we've got the right people to make this happen. And so just touching on where we are today in that marketplace, a clear number 4, we continue to see net inflows coming in from, you know, the competitors that we are attracting from, i.e. the big banks. And, you know, we are very focused as well on our customer service. And one of the metrics that we're exceptionally proud of is that we are ranked number 1 for customer service. So I've talked a little bit about crypto. It is imminent. We have done all the work. We have tested in our environment. We just had a slight glitch happen to us this week, but we are very confident that we are going to be on track and get this deployed ASAP. the way in which we view crypto, though, is very different. We view crypto as being part of an overall portfolio. We have worked with and listened with a number of clients and purposefully developed a simple solution to crypto. So when crypto launches, we're intentionally only offering 5 coins that may extend to 10, but each of those coins have been thoughtfully reviewed in terms of the longevity, the liquidity, and certainly how it stands out from, you know, the hundreds, if not thousands, of crypto tokens that are out there. We also wanted to provide education material alongside our crypto offering, and we're also making sure that people are aware of the risks associated with crypto. But we very much wanted to make it part and parcel with people's overall portfolio and their wealth management strategy. And we're very pleased to have partnered with BTC Markets as the exchange. So for us as a small cap, extremely important to be thoughtful on how we invest and think about, you know, what will deliver the greatest return on investment, with profitability being the end goal. I can assure you, I come from a very strong background of financial management and rigor. So whenever we think about the dollars that we are investing, we think about, is this really generating the greatest return? And we do so with a couple of mindsets. You know, you've already seen today the incredible list of achievements that we have ticked off in the last 12 months. And to continue on our transformation journey, we're focusing on 2 major pillars. The first is to enhance the customer experience. We very much want to get back on top of being the #1 mobile experience in the Australian market, especially now with our broader landscape of wealth management, as well as, you know, just again, focusing on the simplification of the experience across the board and making sure that people have the content and the education at their fingertips. We, of course, also want to continue our transformation to wealth management. And so what does that mean? It means being able to give people a variety of assets available to invest, which are credible. And so, you know, you've seen here today our expansion into Hong Kong equities, US equities, crypto, and of course, you can imagine in the next 6 to 12 months, we will, of course, be introducing new asset types onto the platform. So conscious of time and very keen to receive questions, but I want to thank you for listening, and yeah, happy to answer any questions that you have.
Thanks, Cath. Yeah, we've had a good few questions come in, so let's dive straight into them. First one, how does Selfwealth make money on client cash held? How I think a kind of a relevant question at the time now. How does a 1% increase in the interest rate translate for interest revenue across, I guess, the cash balances in the rate that you offer to client cash?
Yeah, sure. So our banking partner, we do have an agreement in place with them that we do earn the cash rate plus additional monies as a net interest margin on top of that cash rate. So any 1% increase in that cash rate does go straight to our bottom line.
Okay, perfect. Where do you see the number of trades per active customer settling at a sustainable level? As you said, you know, between Robinhood and meme stocks, the last maybe 18 months or 2 years inside COVID have probably not been reflective of a normal environment. Have you got a handle on or a target that you think it might level out at?
Yeah, we do. And look, it comes down again to our customer segmentation. So I think what's really important to consider, and look, I agree, what we saw on the Robinhoods, and look, there are some equivalent Robinhood platforms in Australia. I don't consider Selfwealth to be one of those, just because of the type of clients that we have on the platform. But we absolutely, as an industry, it's about establishing what the new normal is. Of course, there was going to be a decline in retail equity volumes across the board. I do believe, however, that the type of clients that Selfwealth has attracted and wants to continue to attract understand that there are things happen within the cycle. There will always be some level of consistency of equities purchasing for certain types of clients onto the platform. And for those types of clients who were into the meme stocks 100% and frankly were always used to winning, of course that has had the most severe decline, and that's certainly what's already been seen on those platforms that attracted those sorts of clients.
A question on other products that could come onto the platform. Again, something that's probably back on people's radar after the best part of a decade. Bonds, any plans to put bonds back up onto the platform?
Yes. So look, being a true wealth management platform, it is absolutely about providing products that suit where you are in the cycle. So of course, given where we are, it would be foolhardy to not consider fixed income type products. And it's all about making sure that you've got that flexibility there so that, depending on what happens from a macroeconomic perspective, that we have those asset types available to our client base.
And then a question on when did the partnership with ETF Securities end, and are you already seeing cost savings from I guess doing it direct yourself now?
Yeah, so very much enjoy the partnership that we had with ETF Securities. That was only a very recent change. And yes, there's slight cost improvements from that product not being available.
And another one on the cost, we've seen a lot of tech companies cutting staff. I saw the latest one today, Substack cutting 15% of their workforce. What cost rationalizations or cost containment measures are coming down the line, or is it we're going to have to wait another 6 or 9 months until this 18-month transformation program really comes to an end before there'll be a noticeable change there?
Yeah, my comments there is, we are very focused on return on investment. And, from the very start of our transformation program, I have had a lot of experience in building offshore capabilities to help build the tech. And so, we, as part of the transformation program, we did establish an offshore capability to help us build what we needed to build. What I would say about that, given our focus on revenue generating initiatives in the transformation plan, we're carefully monitoring our cost base and carefully monitoring what is the return on those investments. And we'll be making very rational decisions on a monthly basis. I think it is fair to say that, we are sweating the dollar.
Okay. Another question around product. Do you see Selfwealth providing adjacent financial products like credit, mortgages, a self-managed super fund platform? Because correct me if I'm wrong, you can open up a Selfwealth account for self-managed super fund, but I think maybe the question might be more here a kind of a more wealth platform based approach.
Yeah, look, we are looking at a variety of different products and certainly different partnerships. And, you know, Mark, you're spot on today. We very much enjoy, you know, we have thousands of SMSF account holders that utilise our platform for their own SMSF needs and wants. And so we're at this stage, we're very keen to make sure that we're listening to those SMSF account holders and making sure that, you know, our platform is not just fit for purpose, but really is, you know, leading edge for those independent folks. But yes, absolutely, looking at a variety of partnerships to truly build out that wealth management experience.
And I guess in terms of trends you're seeing in the market, you know, it's been a rough 6 months for calendar year, even though we're finishing up financial year in Australia. Have you seen a trend with, you know, customers pulling back a bit and just, you know, holding fire, or, you know, kind of going to the safety of cash, or have you kind of seen people, you know, investing through this market as has been the case previously? Any kind of major trends coming through in customer accounts?
Absolutely. So no, it would be a fair statement to say that, you know, we have seen our investors return more to cash and to hold that cash. I think, you know, there's also been a trend away from the tech stocks and, you know, moving into other industries. And, you know, also for, I would say, a younger demographic to be moving again into ETFs. And so, you know, those trends we've seen consistently over the last, I'd say, 4 months.
And then a question around pricing. Is it time to increase your brokerage prices? As is clear, most of these disruptive brokers will never get to profitability, is the question. I think a bit tongue-in-cheek on the competitors.
Yes, well, we do agree that there are some very unsustainable business models out there at the moment, but we do not believe it is time to increase the brokerage. You know, Selfwealth has always prided itself on low cost, high quality, but, you know, we must make a profit so that we can be here for decades, not days.
And then a question from myself, and just maybe to wrap up, an overview maybe of like the current competitive landscape. I mean, are the big banks, you know, actively, do you think, changing their strategy, or, you know, trying to compete head on with what you're doing, or are they still just plowing on with what they've done kind of previously and just relying on that maybe all-in-one banking / wealth share trading tie-in to just keep them where they are?
Yeah, look, with the exception of CommSec, it is a case of doing the same for the other 3 banks. CommSec, you know, does continue to invest, probably not at the same levels even at what it was 6 months ago, but still, you know, I have a great deal of respect for CommSec and what it has done. You know, in terms of other competitor types, you know, we've already spoken about the unsustainable models that have come into play into the Australian market, so I won't refer to them too much, as that's really not where our focus is. But, you know, we are also very keen to focus on, you know, wealth management, and, you know, where have the people gone that were utilising financial advisors or were planning to use financial advisors, and very much thinking about, you know, how Selfwealth can be a credible platform and solution for those people.
Cath, we are just up on time, and I want to respect your time and everyone else's time, especially given it is end of financial year today, and we're half an hour from the opening match. So thank you very much for coming back in to give us an update on the Selfwealth story, and we'll keep an eye out for the imminent crypto launch, whenever that may be, and the 4C, I presume, the end of next month at some stage.
That's great. Thank you so much again. Appreciate it.